The Bangko Sentral ng Pilipinas kept interest rates or the cost of borrowing steady again this month. The key rate remains at 6.25%. This is the BSP Monetary Board's first decision under Governor Eli Remolona and comes despite other central banks hiking rates amid soaring consumer prices. Joining us now for his views from Tokyo is Makoto Tsuchiya of Oxford Economics. Tsuchiya-san, thank you so much for joining us. Is this a good move for the central bank to keep the cost of borrowing on hold at 6.25%?
Yes, so I think the today's BSP's move is prudent given the, so if you look at, only GDP, Quito GDP came in much lower than the consensus expectation. So it actually calls for a more dovish stance from the monetary policy. But if you look at inflation, although declining, it's still above the BSP's 2% to 4% target. So I think there's a good reason that the BSP has remained cautious today.
Indeed, prudent, cautious, waiting for more data. I interviewed the new Governor Eli Remolona a couple of weeks ago, and he said he will base this decision today on data. And the data seems to show, with the weaker GDP numbers, that it was prudent and more conservative to keep interest rates on hold. But of course, this was a big test for the new central bank governor, Tsuchiya-san, to keep rates on hold in his first Monetary Board meeting.
Yes, I think so. But if you look at, currency, the Philippines peso has actually depreciated a bit for the past few weeks against the US dollars. And, so the growth is declining, inflation is declining, but still it's remaining high, and the currency is actually weakening. So I would say that, the BSP governor is facing a tricky task here.
A tricky test indeed, because the Monetary Board also has to consider, Tsuchiya-san, supply pressures, especially with rice. Prices have risen globally. And of course, you have the onset of the El Nino phenomenon, the dry season. This could definitely put impact on prices and have a larger effect on inflation, on Philippine inflation going forward.
Yes, I think so. So I guess those supply chain issues among the food items are one of the biggest upside risks to prices. And CPI inflation has actually continuously declined since January of this year. But we actually do expect CPI inflation to pick up in August and September because of what's going on in the rice market and as well as the vegetable market.
And of course, core inflation remains high. Core inflation is when you eliminate all the volatile prices of food and oil. So you mentioned about the Philippine peso against the US dollar. It depreciated to 57. But it seemed like the market was looking for potentially a rate hike or at least a statement that they could raise interest rates in future meetings. So we saw some strength. But now, with them keeping rates on hold, are we likely to see continued weakness once again of the peso against the US dollar?
Yes, so I think the recent weakness of the Philippines peso is not only limited to the Philippines, but it's a regional phenomenon because most of the emerging Asian currencies have actually depreciated because of the expectation of lower Chinese growth. So it's not only the Philippines issue, but and also while the BSP has paused today, the governor has said, the BSP remains ready to hike if there is any upside surprise to inflation. So I think the Philippines central governor is walking a fine line.
Indeed, working a very fine line because we've had two major typhoons plus the southwest monsoons hurting the agricultural sector. So if you're expecting consumer price inflation to rise potentially in August and September from the previous month of 4.7%, what would be that number of Oxford Economics, Tsuchiya-san?
Right. So in August, I see inflation picking up potentially to around 5.5%. But it's going to decline in September, but it will remain higher compared to 4.7% seen in July. And from there on, I actually expect prices to resume declining because this is just one-off supply shock, not demand-driven inflation. So this is a very temporary phenomenon, and I expect prices to come down to within the BSP's target by the end of the year.
All right, but so with these peaks and valleys in inflation, where do you think will the central bank put itself in terms of monetary policy? Will they hike and then cut, or will they just remain where they're at for the remainder of the year?
So while I think that risks to inflation are to the upside and the currency might have some more room for further depreciation, our baseline assumes that the BSP is going to keep its policy rate at 6.25% for the rest of the year before cutting in Q1 2024.
But by keeping rates where they're at, if you say so, Tsuchiya-san, before a rate cut early next year, are we not behind the curve? I mean, in monetary policy compared to the United States and the UK and other countries which have raised the cost of borrowing recently?
That is a good point, but if you look at the U.S. Fed, our U.S. team expects that the Fed has now reached the peak of its rate hike cycle. So the interest rate differential with the U.S. is not going to continue narrowing from here on.
Yeah.
And again, if you look at domestic economy, it's not doing very well. So hiking at this point would be detrimental to the economic well-being.
All right, in the first quarter of this year, we saw more than 6% growth. In the second quarter, 4.3% growth. And then quarter on quarter, we saw a contraction of 0.9%, which is a big disappointment for the Philippine economy, albeit it grew by 4.3%. So have we really felt the full effect of the 6.25%, or are we likely to see a further slowdown in economic growth in the third quarter as a result of this?
I think that, in terms of sequential momentum, quarter-on-quarter growth, Q3 is it's likely to see some improvement. But at the same time, I think the growth will remain very tepid because the lagged impact of monetary tightening over the past year is not going to be contained only to Q2, but it's going to linger for a while.
So what is your expectation for the third quarter?
Right, so I think it's going to, year on year, it's going to decline, but Q on Q, it's going to pick up. And as a whole year, we expect the Philippines economy to grow by 4.5% this year.
Wow, that's much lower than the government's targets of 6 to 7%. Not good for the markets. Makoto, Tsuchiya from Oxford Economics, thank you so much for your insights on the Philippine economy.